this is Ma'am Buen again for our accounting tutorials. This time we're going to discuss worksheet preparation, or sometimes it is called working paper. Worksheet preparation is optional because after the preparation of adjusting entry, the last topic that we discussed after that is preparation of adjusted trial balance, which we already did from the last video. After the adjusted trial balance, the next step should be preparation of financial statement. And for us to prepare, to facilitate the preparation of financial statement, it is better for us to prepare working paper or worksheet. So that is what we're going to do now. Again, worksheet preparation is optional on the part of the accountant. Okay, so that is what we're going to do. Here is the trial balance of J. Amante Surveyor. So we have the trial balance as of December 31 of the current year. So from the trial balance, we have an additional information. Okay. The following information pertaining to the year-end adjustment is available. The requirement is journalize the adjusting entries and prepare worksheet. So let us prepare first the adjusting entries. Okay. The first data, the 360 prepaid advertising represents expenditures made on November 1 of the current year for monthly advertising over the next 18 months. Okay, let us look at the trial balance. Oh, by the way, so let us first analyze the trial balance. So we have cash, accounts receivable, we have prepaid advertising, we have engineering supplies, we have survey equipment, we have accumulated depreciation survey equipment, then we have accounts payable, we have unearned survey revenue, we have notes payable, we have Amante capital, we have Amante withdrawal, we have survey revenues, we have salaries expense, we have rent expense, insurance expense, utilities expense, and miscellaneous expense. Okay, again, let us have the first data. The 360 prepaid advertising represents expenditure made on November 1 of the current year for monthly advertising over the next 18 months. Okay. From our trial balance, we have here prepaid advertising. Prepaid advertising, again, is an asset, which means asset method were being used. So for this means the 360,000 is for 18 months. Okay. So our adjusting entry, again, asset were already recorded in our trial balance. So, for our adjusting entry, we're now going to have our expense. So, we have letter A, that is advertising expense, and credit prepaid advertising. Okay, this 360 is for 18 months. 360 divided by 18, it means 20,000 per month is our expense. Again, we're going to need the expense part, the expense amount. Of this 360,000, how much were already expensed, or how many months were already expensed? From our information, it was paid on November 1. So, from November 1 to December 31, that is 2 months. If it is 20,000 per month, so 2 months is 40,000. Okay, letter B. For letter B, account of engineering supplies at December 31 amounted to 90,000. Okay. Again, account of engineering supplies at December 31 amounted to 90,000. Again, in our trial balance, let us have engineering supplies 270,000. So, engineering supplies is an asset. It means asset method were being used. So, for our adjusting entry, we have to record our expense. Out of 270,000, there's still left 90,000. So, again, since this is asset, in our adjusting entry, we're going to record expense. So, we have engineering supplies expense and credit engineering supplies. So what we need is expense. In our trial balance, engineering supplies is 270. And in our additional information, it says that out of 270, 90,000 were already has been unused. So minus 90,000, which means 180,000 were being used or expense. So that is 180,000. Okay. Letter C. Depreciation on surveying equipment amounted to 160,000. So for letter C, that is an adjusting entry for depreciation expense. So we have debit depreciation expense and credit accumulated depreciation for equipment, surveying equipment. Okay, that is already given, 160,000. Okay, letter D. 1/3 of unearned survey revenues has been earned at year end. Okay, again, 1/3 of unearned survey revenues has been earned at year end. Again, in our trial balance, we have here an earned survey revenue of 120,000. And unearned survey revenue is a liability, which means liability method were being used. So, for our adjusting entry, since liability were already recorded in our adjusting entry, what we're going to record is the revenue. And if we're going to record our revenue, again, it is on the credit side. So, what will be our debit side? Unearned survey revenue. And credit survey revenue. Okay. That is survey revenues, the account title. So again, our entry, debit unearned survey revenue and credit survey revenue. The amount that we're going to need is survey revenue because unearned survey revenue is already reported. So the amount that we're going to report now is survey revenue. Of this 120,000, in our information, it says that 1/3 of unearned survey revenue has already been earned at year end. So how much is 1/3? That is 120,000. It's 120. So by 3, it means 40,000. So that is 40,000. Okay, next. Letter E. At year end, salaries in the amount of 140,000 have accrued. Again, at year end, salaries in the amount of 140,000 have accrued. So this is accrued expense, and to record our accrued expense, adjusting entry to record our accrued expense is just to record the expense and the liability. So our entry, letter E, that is debit salaries expense and credit salaries payable. How much is that? That is 140,000. Okay, and letter F. Interest of 60,000 on notes payable has accrued at year end. Again, it is accrued. And it is notes payable. So if it is notes payable, Interest means interest expense. So our entry, debit, interest expense, and credit, interest payable. Again, the amount is given, that is 60,000. Okay. So let us now prepare our worksheet. Here is the columnar pad. So, for our worksheet, we have our columns. The first column is the trial balance. Then after that, we have adjusting entries. Then we have adjusted trial balance. Then the next two column is comprehensive income. Then we have the last two column is financial position. Okay, so to be specific, this is a statement of comprehensive income. This is also a statement of financial position. Okay, so from our trial balance, this is our trial balance. So it is just transferred to our working paper or worksheet. So we have, again, we have cash, 210,000. We have accounts receivable, 930,000. We have prepaid advertising of 360,000. We have engineering supplies, 270. We have survey equipment of 1,890,000. We have accumulated depreciation of 840. 640, I mean. We have accounts payable of 190. We have unearned survey revenues of 120. Then we have the 500,000 notes payable, a monthly capital of 1,120,000, a monthly withdrawal of 700,000, survey revenues of 6,510,000. We have salaries expense, we have rent expense, we have insurance expense, we have utilities expense, and miscellaneous expense. Okay, so after that, we're going to post our adjusting entries. So in columns, for the next two columns, adjusting entries, we're going to post the adjusting entries that we have just prepared. So we have our first adjusting entry, debit advertising expense and credit prepaid advertising. Okay, in our trial balance, we do not have advertising expense. So we're going to add it in our account. So we have advertising expense. How much is that? That is 40,000. So let us post it. We're not going to write anymore in this first two column. All the adjusting entries will be recorded on the next two columns. This is debit and this is credit. So that is debit advertising expense, 40,000. So we have 40. And credit, prepaid advertising. We already have prepaid advertising. So it should be posted aligned with prepaid advertising. So on the credit side, so that is 40,000. Okay. The next one is debit engineering supplies expense 180 and credit engineering supplies. Again, in our trial balance, we do not have engineering supplies expense. So we have to include it or add it in our working paper. So we have engineering expense. How much is that? That is 180,000. So again, it is on the debit side. So this one is 180,000. And we already have engineering supplies. This is an asset. So it is credit. Again, on the credit side, we have 180,000. Let us have here debit credit. Okay. Then the third one, debit depreciation expense and credit accumulated depreciation. So, again, depreciation expense, we do not have depreciation expense, so we have to include how much? That is 160,000. That is 160. So, again, it is debit 160. And we have credit accumulated depreciation of 160. We already have accumulated depreciation, so it is credit 160. Okay. The next one, unearned survey revenues, 40,000. So, we already have unearned survey revenues here. Where is that? Unearned survey revenue of, in our trial balance, it is 120. So, unearned, it is debit. Unearned survey revenue, so debit 40,000. And credit survey revenue. We also have survey revenue. So, we have credit 40,000. Okay. Then, we have salaries expense, 140. We already have salaries expense. Salaries expense of 140. That is debit. 140. And credit salaries payable. We do not have salaries payable yet, so we have to include salaries payable. That is credit 140. So, credit 140. And the last one, interest expense of 60,000. Again, interest expense. Because we don't have interest expense here. So, that is 60,000 debit. And credit, interest payable. Again, we do not have interest payable in this trial balance. So, we have to include it. Interest payable. Credit of 60,000. Okay, let us now have our total. So, we have, again, 40,000. We have 40,000 plus 140 plus 40,000 plus 180 plus 160 plus 60. Okay, so that is 620,000. Okay, so for the credit side, we have 40,000 plus 180 plus 160 plus 40 plus 140 plus 60. So that is 620. Okay, let us double rule. Okay, so after our adjusting entries, our next two columns is adjusted trial balance. So this is the summary, the consolidated of the first two columns plus the next two columns. Okay, although we have here column numbers, this is 1, 2, 3, let us just make it visible. So this is column 1, this is column 2, 3, 4, 5, 6, 7, 8, 9, and 10. Okay? Because for our adjusted trial balance, So for the first one, we have cash. We're just going to extend the amount. So we have cash. Since there's no posting on columns 3 and 4, so cash is still the same. That is 210,000. From debit column, we have to write it on the debit column also. So this is debit, this is credit. Okay, from debit column, we have to extend it to debit column. So that is 210,000. And then again, for accounts receivable, the same. It is 930. For our prepaid advertising, we have debit and we have credit. The rule is, if we have debit, that is column 1, and another debit, that is column 3, 1 and 3, it is add. Total to column 5. Okay? So again, if we have debit and debit, just like this one, debit and debit, column 4. So this is debit and credit. So later. And also, if we have credit and credit, that is column 2 and column 4. It is also add. Total to column 6. If we have debit and credit, or credit and debit, credit and debit, this is minus, deduct, and balance to higher amount column. So it's either 5 or 6. Okay. Let us make it clear. What we are now preparing is column 5 and 6. This one, column 5 and 6, that is for adjusted trial balance. Okay, so the amount that we're going to write in column 5 and 6 are the total or the balance of column 1 and 2 and 3 and 4. Okay, so again, for cash, since there's no posting in columns 3 and 4, so it is still the same, 210. And for accounts receivable, again, it is still the same, 930. But for prepaid advertising, we have debit and credit. Our rule, if it is debit and credit, deduct. And whatever is the balance, post it in the higher amount column. Okay, so we have, that is 360 minus 40. So that is 360,000 minus 40 because it is deduct. Okay, debit and credit, deduct, and the balance 320, post it in the higher account column, which is the debit side. Debit column is higher because it is 360. So in our adjusted trial balance, write the 320 in the debit side, debit column. Okay. Then, same with equipment, engineering supplies. That is debit and credit. So we have 270 minus 180. That is 90,000. Again, it is on the debit side. Then we have survey equipment. It is still the same. That is 1,890,000. 1,890. Then we have our accumulated depreciation, that is credit and credit. If it is credit and credit, it is add. And the balance in our credit side, column 6. So that is 600, 640 and 160 plus 160, that is 800,000. So credit 800,000. Then we have accounts payable 190. So 190. Since there is no posting on the adjustment column. Then we have unearned survey revenue 120. We have credit and debit. So again, minus 120 minus 40,000. So that is 80,000. Since 120 is greater than 40, so the balance of 80 is on the credit side. That is 80,000. Then we have 500,000 credit. We have 1,120,000. 120. We have 700,000. The same. Debit. From debit to debit. We have survey revenue. 6,510,000 credit and 40,000 credit. So, credit is add. So, 6,510,000 plus 40. So, that is 6,550,000. So, credit, 6,550,000. And we have salaries expense, 327 debit and debit 140,000. So, debit is add. 327 plus 140. So, that is 467,000. Debit. Wait. Okay, let us check it again. This is 327 plus 140. So, 467,000 debit. 467. And we have, again, we have 960 rent expense. We have 250,000. We have 160, 80,000. Okay, and the additional accounts that we include, we have 40,000 debit. Then we have 80,000. We have 160. We have 140 credit. We have 60 and also 60. Okay, let us get the total. Okay, so after footing, again, footing is the process of adding a column. So after footing, for our adjusted trial balance, our total debits is 9,440,000 and our total credits is also 9,440,000. Take note that for this from trial balance, adjusting entries, and adjusted trial balance, our total debit should equal to total credit. So it should always be balanced. Now, after adjusted trial balance, the next two columns or four columns is statement of comprehensive income and statement of financial position. Okay, so from the adjusted trial balance, this amount will be posted either to statement of comprehensive income or statement of financial position. So if you have already posted it in the statement of financial position, you should not post it anymore in your financial statement of comprehensive income. So what are the accounts that will be posted in comprehensive income and in financial position. Elements of comprehensive income are revenues and expenses. So only revenues and expenses will be posted in comprehensive income, while for financial position, the elements of financial positions are assets, liabilities, equity, and withdrawal. So again, assets, liabilities, equity, and withdrawal will be posted in our statement of financial position. Okay, so the first one for our cash. Okay, since cash is an asset, so it should be posted in our financial position, and from debit, it will be posted to debit column. Then we have accounts receivable. Again, accounts receivable is an asset, so it should be posted in the financial position from debit to debit. Then we have prepaid advertising of 320,000. So, again, prepaid advertising is an asset, so it should be posted on the debit side of financial position. And then we have engineering supplies, also it is an asset, so it should be posted to financial position, debit to debit. Then we have our service equipment, survey equipment. It is also an asset, so it is from debit to debit of financial position. And then we have accumulated depreciation equipment, that is a contra asset. So it will be posted on financial position, credit. So it is on the credit side. Then we have accounts payable. Accounts payable is a liability. So again, it is statement of financial position, credit. Then we have unearned survey revenue. It is also a liability. So it is part of financial position, credit, 80,000. Then we have notes payable. Again, it is a liability. So it is on the financial position, that is 500,000 credit. And we have a monthly capital, that is equity, so part of financial position, that is 1,120,000 credit. And we have a monthly withdrawal. Again, it is a contra account of equity account, so it is financial position, debit. Then we have survey revenue. Survey revenue is a revenue, and it is an element of comprehensive income. Again, the revenue and expenses will be posted in our comprehensive income. So we have from credit to credit. Then we have the next one is salaries expense. That is an expense. So debit to debit of comprehensive income. And we have rent expense. That is 960,000. Again, it is a comprehensive income. So from debit. And we have insurance expense of 250. So comprehensive income. We have next is utilities expense 160. Again, it is a comprehensive income account, 160,000 debit. Then we have again miscellaneous expense from debit of adjusted trial balance to debit of comprehensive income. Then advertising expense. Again, you have 40,000 debit. You have engineering supplies expense of 180,000 is still comprehensive income account. Then we have depreciation expense 160,000 debit, and we have salaries payable of 140,000. It is a liability, so it should be reported in our financial position. Again, we have salaries payable of 140,000. This one, it is a liability, so it should be reported in our financial position. And we have interest expense of 60,000. Again, it is an expense, so it should be part of comprehensive income. Then we have interest payable of 60,000. It is a liability, so it should be included in our statement of financial position. Okay, Then after that, let us get the totals. Again, let us do the footing of the 4 columns. Take note, the total of these 4 columns will not be balanced. So our total debits of comprehensive income is 5,300,000, while total credit is 6,550,000. Total debits of financial position is 4,140,000, while total credit is 2,890,000. Okay, get the difference between the two columns. 6,550,000 minus 5,300,000, and that is 1,250,000. And the difference between these two columns of the financial position should also be 1,250,000. It is at this amount wherein you have to balance. Okay, so, and it means this one, you have to write the difference of the two columns on the smaller amount column. So, for the comprehensive income, the smaller amount is the debit side, while for the financial position, the smaller amount is the credit side. So, if in that case, it means that is our net income. Okay? So, get the total again of the 4 columns. So, that is 6,550,000, both for comprehensive income, debit and credit, and 4,120,000 for statement of financial position, debit and credit. Okay. So, let us have our, here is our working paper. So, let us put the heading that is J. Amante, Surveyors, Worksheet, December 31 of the current year. So this is J. Amante. Okay. So here is our worksheet preparation.